Imagine owning a business that nearly everyone uses, rarely invests in, and that's growing into a high return green energy machine. Today, I'm diving into why I believe WM stock is the best long term stock on the market, and I'll show you their fresh Q3 numbers that back up that case. For those that don't know, Waste Management, ticker symbol WM, is North America's largest waste collection, recycling, and disposal company, which operates millions of residential, commercial, and municipal accounts. The stock is currently trading at $208 after hours, which is at the time I'm recording it. They reported their Q3 earnings, and some of the things I want to point out is how they've built such a huge moat as they have scaled and have created a huge asset network, which includes landfills, trash trucks, recycling facilities, and increasingly a sustainable energy arm, which I think is going to be the main thing that allows them to continue growing. Because now waste management isn't just hauling trash, it's capturing landfill gas, generating renewable natural gas, and processing recyclables, which can be even used with their expanding medical waste arm. And I think this diversification positions them for very long-term growth. And what we see here is diversification. It is spreading out your investments, which leads to higher returns as you are not emphasizing everything on one thing, and you're continuing to grow every aspect of the business. The stock, I don't want to emphasize the price, but I do want to emphasize fundamentals with the stock. It is still worth noting that the stock hasn't skyrocketed in short-term fashion. That's often a very good benefit for long-term buyers. According to the charts I have here, year to date, the stock has returned just under 7%, and it has only preserved 3% this year, with a 5-year total shareholder return of 110%. That is a muted near-term move, may reflect the market underpricing the structural growth we have seen on the company's front. And this comes after the Q3 earnings report, which just came out today, where there are about 4 to 6 numbers that really matter, in my opinion, and why I will tell you what they matter to you. So the revenue growth is 14.9% year over year, and it has grown to 6.4 billion. This shows that WM can grow top line despite industry maturity. The legacy business grew 3.7%, which is their business segment that is the legacy department, and the total company growth was boosted by the WM Healthcare Solutions segment. Not only this, we saw that the 6% price increase in the collection and disposal business core price plus 3.8% yield helped drive the legacy business revenue as well, and they are continuing to generate more revenue. So for a commodity style business such as garbage haulage, these are very strong growth numbers, and it is suggesting that they have pricing power, efficiency gains, and their diversification has worked. This pricing power is one of the main things I want to point out, because there aren't many companies in the space, and there's not many companies doing it quite as well as Waste Management has in the past. So I think this will continue to give them a hand over their competition and grow at a high rate in the next coming years. Also, I want to point out the operating EBITDA of 1.7 billion and 26% margin versus their prior year, which was much lower. On the surface, obviously, I do want to point out that the margin has gone down, but it's because of lower commodity prices in recycling and other headwinds. But the legacy business margin improved, such as the collection and disposal business, which had an adjusted margin of 38.4% this quarter alone. This means I think that the margin headwinds are of course going to be real in the future, but the fact that the core business is still improving their margins via pricing, cost, and asset usage, I think this is a very strong structural point for the company to be at. Also, the free cash flow is one of the main things that I think that people are underestimating. With 2.11 billion, up 13.5% year over year, this increase is crucial for a long-term investment. And it shows that cash generation it's going to drive dividends and share repurchases and debt reduction. So the company having a lot of cash is going to continue to drive a good stock, and a stock that I'd want to be investing in for the next couple years. Waste management isn't just earning profits, it's converting them into a cash at a higher pace, which means it can reinvest profitability and return money to shareholders once the time comes when they are able to do that in the next coming years. Also, we saw some of the main things is their guidance. Guidance is still remaining strong, and they've confirmed they expect full year results in that range despite the headwinds, which shows their management is very confident in the stock. And for a long-term holder, this means you're buying into a company with predictable cash flows, growing earnings, and not just speculative upside. And as we see here, the guidance remains 2.8 to 2.9 billion dollars, and the adjusted EBITDA guidance of 7.5 billion. This is a very strong outlook to have, and it shows the confidence that the company really has in growth. Not only this, I want to point out is their structural investment. With the 10 out of 10 out of the original 20 planned facilities in total recycling automation and new market projects completed. This shows that there's a hidden growth lever that we are on as investors we do not have access to seeing this. And it shows that the business is transitioning from just waste hauling to sustainable energy, which I think is one of the main things a lot of people are missing out on with this investment. It is an investment in energy in the future, and there's so much waste happening, especially in the North American region, that I think this is the best investment to be making in the next couple years. There, not only this, but we see there's higher margins and higher growth in the energy sector, which I think can offer the company a very large landslide of movement in the future. Not only this, we've seen their leverage is improving in the target of three times leverage by mid 2026. For a long term investor, this basically just means that there's less financial risk and more optionality for capital allocation. And this means such as dividends you could see in the future, M&A, and I think um, Waste Management is generating strong growth, cash flow, improving its core business, and layering its higher growth margin segments such as recycling, the healthcare, RNG, which is also part of their energy department. And I think that is a very rare combination in such a mature industry that has grown over the past few years. So sentiment is showing me that the analysts show caution, but due to recycling commodity headwinds, but many see there's so much value because of the structural growth. And I think that is shown by the average price analyst price target of $251 a share versus the current $213 price, which is even lower now after hours. And it's shown by all these buy orders. And even I think the retail segment, of course, Waste Management is much more boring than your average stock. It's not a flashy stock. It's just trash and recycling. It doesn't get the hype of tech growth names. But this can be an advantage for long-term investors trying to avoid valuations that are out of the ballpark, because so many stocks these days are trading at insane valuations that aren't built on anything. And this shows that there is going to be a huge setup here, and obviously one of the main things I want to point out is the risks that the management has even posed, and that is the commodity price declines. This is basically showing that they're facing significant headwinds from falling prices for recycled commodities, which has cut into recycling revenue and overall profitability. In its third quarter, WM noted that recycling from its recycling business dropped due to lower market prices. The company average price for single stream recycled materials fell by 35% compared to the prior year. I think this is the main reason the stock has dropped, and I think this shows that there's volume softness in residential and regulatory environmental risks to the company. But despite this, I think everything is looking good as long as there isn't macroeconomic pressures, and obviously they have caused issues in the past, but as long as they don't continue to create a decrease in overall waste volumes, then I think this business is poised to grow over the next coming years. Also, we see the insider ownership. There's obviously no insider mania, which suggests management is just executing rather than hype. 82% nearly of the flow is owned by institutional ownership. And my view is that the market appears to be giving Waste Management a conservative valuation despite strong fundamentals, which creates opportunity for long term investors. I want to break down the price really quick. I'm not going to do a full chart tutorial, but it's worth noting that the share price is not in euphoric mode. As we've seen, it's consolidated here, and now it has dropped down to 207 in the post hours. A modest base or consolidation phase has given the long-term buyers more margin of safety, and this drop has really given us a really good opportunity to be a buyer. From a fundamental perspective, if free cash flow is set to grow significantly and margins can expand, then the technical pattern should eventually reflect upward breakout momentum. So the key levels to watch is the support level around 200. If it breaks under 200, then I would be a little bit worried. I'd watch for a pullback, but also just dollar cost averaging at these levels are it's really not a problem because the company has consolidated so well and the company is still generating such a large revenue. Not only this, I want to watch for a breakout above prior highs of the 230 to the 240 range. This could trigger renewed momentum if fundamentals continue to surprise on the upside potential. So in general, I think if WM reports further margin expansion or higher than expected commodity tailwinds, technicals will likely follow, and we will see this rebound very much so up until the all-time highs in the 240s. For a long-term holder, I think a moderate entry point with a time horizon of 5 to 10 years matters more than any short-term swing trade, especially for a stock that hasn't moved too much in the last year. So what lands me here is I think that WM qualifies as the best long-term stock on the market for me because it combines the rare features of stable reoccurring revenues, pricing power, improving margins, strong cash flow, structural growth initiatives with their RNG and recycling as I mentioned earlier, and I think it is very underappreciated by the whole market, and it's mainly just been owned by institutionals in all time. For all the stocks that I cover, few offer that blend with such a clear moat and optionality. My position, I'd be comfortable with holding WM for 5 to 10 years, buying them today and not even looking at it, just reinvesting dividends, treating it as a cornerstone equity in a diversified portfolio. And my entry strategy is because the price is moderate and not frothy. I think a phased dollar cost average entry, as we can see here on the screen, just constantly buying at different levels that average out to a lower price. I think this might be the best way to do it because you got to keep an eye on the upside triggers. There's going to be margin surprise, commodity price stabilization, and more RNG ramp. So, of course, you're going to have to watch for risks, of course, in any stock. But in general, I think WM's third quarter 2025 numbers show strong growth, margin improvement in the core business, and cash flow generation, which is strengthening. And it's important for a stock investor, especially when you're long term like us. The company is evolving beyond a waste haul business into a diversified environmental infrastructure and energy player, which gives them a lot of options for further upside in the future. The market appears to be undervaluating this optionality, which is offering a window for long-term investors. If you buy WM today, you're buying scale, durability, cash flow, and growth all in one package. Catalysts to watch in the future are margin expansion in collection and disposal, stabilization or improvement in recycling commodity prices, and free cash flow growth accelerating into 2026, which I think management cited about 4 billion for 2026, which I think it's very possible. And if it were to happen, I think the stock could see a lot of upside. So as you guys see, that's my investment thesis. Why I think this is one of the best, literally the best stock on the market for long-term growth. Thank you guys for watching so much. If you guys found this at all helpful, hit the like button. Make sure you guys subscribe for more long-term stock deep dives, and I'll see you guys in the next one. Peace.